Hello, welcome to the new and improved Stockout. Here with a co-host for the first time, Grace Sharkey. Grace, thank you for joining me on the Stockout.
Yeah, no, this is a lot of fun. I'm excited. I was telling people, we do this segment kind of on the radio already, so now we just get to bring
Mhm.
it to a whole new audience.
Yeah, it was one of the first pieces of feedback I got on the Stockout show when I started about 2.5 years ago. Is you really, should get a co-host that would make this much more engaging. And so finally, we've made that happen. So better late than never. Happy to have you on the show. You're going to bring a lot of insights from the retail side as well as the technology side of things. And with your freight background, really should be great to compare notes here. So what we're going to do today on the Stockout as the first one as part of the new revamped Stockout, we're going to talk a little bit about how the Stockout is changing and talk a little bit about the Instacart IPO, which is going to be the topic of the show. And then since Labor Day is a slow day for most people, off day for most everyone, and I think it's like kind of not a real holiday because people don't do as much traveling as, let's say, 4th of July. I'm going to give you a reading list from FreightWaves.com and give you something to go outside and read. And then we'll talk about the upcoming guests, which I think we have some good ones for September. But before we do that, if anyone has not already signed up for the Stockout newsletter, you can do that at www.freightwaves.com/the Stockout. And it's going to be the first one there under newsletters. You can do CPG, the Stockout. I don't know if it matters at this point in retail. I think we've already combined the lists into one, where we have about let's say 20,000 something people sign up for the CPG newsletter. We did have two separate newsletters, one on CPG, one on retail, and remarkably, there wasn't that many overlap with people who were signed up for both the CPG and retail newsletters. But a lot of the part of the reason there's a sort of the new style with CPG and retail into one. And I want to talk a little bit about why we're doing this. And it's really because following the CPG industry involves a lot of following the retailers, and sort of following any industry. One of the things you're doing is you're looking at those companies' customers, which in this case CPG companies would be the retailers in addition to the end consumers, and also their suppliers. Sort of think of the Porter's Five Forces thing. So we were already sort of talking about a lot of the same topics, and that's why being on your radio show was so fun, because, like, for instance, the Kroger Albertsons deal,
Yeah.
you follow that closely, I follow that closely, sort of coming from different perspectives. So those are the type of topics I'm excited to go through on the show with you.
Yeah, what's also interesting too is, like, thinking of Kroger Albertsons in particular, like, you and I are both in different markets and different geographies as well. So even as purchasers and users of applications, etc., I think it'll be an interesting dynamic to see even how consumers are maybe a tad bit different depending on the region that they're in too. So yeah, I'm excited. I think this is going to be a lot of fun, and it's interesting you say that about our audiences in the newsletters not really being exactly the same. So hopefully both of our audiences will learn something a little bit deeper that we haven't touched on in our individual shows. And yeah, I'm especially excited with your experience in this field. And yeah, my more maybe tech side of this, I think discussions could get pretty interesting. So yeah, excited. This is gonna be a lot of fun. And your co-host has arrived, I guess, is the best way to put it.
Yeah, that's great. And so we'll do this show. We do it goes live every Monday at 2:00 Eastern time, and then we send out the newsletter. For now, it's Thursday. Maybe that gets moved. I don't know. I'm sort of the mind that when you have a newsletter that's ready that it's done, that's when you should send it out. Versus others who think, well, it should be exactly the same time every week, so people mark their calendars. Which I don't really think people mark their calendars to newsletters. I think they read them when they can get around to reading them. So different perspectives there, but it's going to be a lot of fun, and I think we can just really sort of compare notes and learn from each other. So with that, I want to get into topic of the show today, which is Instacart. 1 week ago, last Friday, filed its IPO. There's been a lot of discussion about Instacart. And do you know much about this company? Have you followed it? I mean, you must have followed it some from all the retail coverage.
Well, yeah, in particular, especially it was really hot right when the pandemic started. It was a very easy way for consumers to still keep up with their retail shopping without clearly being able to go to stores. Instacart as a whole has over 1,400 retailers representing over 80,000 stores. And I think, in particular, when you look at companies like Shipt, who really are talking Kroger, even at this point, and a lot of other facilitators in the space. It's an easy way for, I think, more of the smaller to medium sized retailers, brick and mortar stores in particular, to compete with companies like Walmart and Amazon. I mean, that's the biggest thing, right? You see these two companies
Mhm.
in particular have invested in their own wonderful delivery networks, and this gives
Mhm.
those smaller brick and mortar stores a chance to compete and find some extra revenue at the same time.
Yeah, so I guess you have a few things going on with Instacart where, like, I'm not totally don't totally understand the business model. I'm still learning it, but I guess you can go to the Instacart app if you're a consumer and buy what you want, and then you have kind of a personal shopper who runs around and takes all these instructions to shop sort of on your behalf. And so that's sort of one way that they generate revenues. They have fees on that, and then if you're on the retail side, they're basically licensing their technology to be on the Instacart platform, so they can benefit from that technology because grocery stores really don't invest very much in technology and never have. They make the case that
Yeah,
it's like 1% of their sales, and so it's sort of that automatically sort of upgrades their capabilities there. So that's sort of the other revenue stream. But then the revenue stream that really seems important longer term is the advertising revenue,
yeah,
which
yeah.
is, I think, what is potentially going to get Wall Street excited. I think if this is a successful IPO, that's what they care about.
Yeah, and it is interesting though, because if you look at uh, Amazon, I think does a great job of it, but Walmart in particular has invested a lot into their advertising on their third party selling platforms as well. It's one of their biggest drivers too. So it's interesting. I kind of wonder if Instacart has learned that from Walmart, or if Walmart's learned that from Instacart. But uh, it's I think another way of generating revenue that these platforms have figured out that they can do at the same time. I will give Instacart this over someone maybe like Walmart and Amazon. It depends on who you're buying from and what brands. The positive of Instacart is that you could potentially, as a consumer, right, purchase from multiple different brands, and they drive
Mhm.
around and pick up at all these different stores and locations, which
Mhm.
also I think the advertising side helps with more of those type of purchases. Where when you look at someone like Walmart and Amazon, you have to be within their third party selling platform in order to
Mhm.
achieve that type of experience. But I also think that with the Instacart model, you also deal with recently they've had a lot of like theft and non-delivery issues where Walmart and let's say Kroger right have shipped where they really focus on the same delivery person, almost like an experience of like that mailman that delivers your mail back in the
Mhm.
day. Well, still, but who says hi to their mailman anymore? But delivering that same experience over and over. So yeah, that again, I look at both in different forms, but when it comes to the advertising side, that seems like something that all of them have really started to think about and consider. And I agree with you. I wouldn't be surprised, right, if that's what Wall Street does focus on, what they're generating on that side as it makes that IPO.
Yeah, so I didn't know about the theft with the Instacart. So you're saying the Instacart personal shoppers go into the retailers and just in the process of doing that, they take and just people look the other way because they think, oh, he's just doing the personal shopping for the other person.
Yeah,
That's
or
interesting.
they pick up everything and then all of a sudden they're not delivering at your house, right? It's being taken home. So
Mhm,
there's been a lot of like pushes on their vetting process and how they're doing
mhm,
that. And it's kind of like the Uber experience, right? And we saw a lot of that at the beginning of Uber. Is like, okay, how are you choosing these drivers? So I think that's a big hurdle that they're going to have to overcome. Where Walmart, right, can leverage just their own employees that they are
mhm,
paying
mhm,
significantly well and offering benefits too. It's a little bit more controllable. I think where Kroger might not be using Kroger employees, Shipped employees are the same way. I
mhm,
use Shipped quite often, and it'll
mhm,
actually tell me, hey, I think her name is Laura. Like Laura is not available at
mhm.
this time, but she could come in a couple of hours. So I can either choose to use like the same person over and over again, or
Uh-huh.
risk it. You could say with someone else. So I am interested in how they're going to fix that problem without being like owned by some specific entity in a way.
Yeah, that's really interesting. And it does sort of get to the fact that once you deliver a relationship with those people, that tends to be sticky. I mean, you almost probably you know get to know
Yeah.
Laura a little bit, and you can almost feel like she's your friend at some point. Um, so
Yeah.
so a couple of things that sort of tie in with some of the things that the other big retailers have said and have done. I mean, some have suggested this Kroger Albertsons deal. The main rationale for doing it is the data that's collected, where all of a sudden they're going to have data on over 100 million households in the US, which is almost everyone who buys from a traditional grocery store. And then you think of
Yeah.
Walmart, all the data that they can collect. So their data is going to be very strong too. I think when you think about just having the variety of potentially addressing those higher end consumers that maybe Walmart or Kroger Albertsons could satisfy 80% of what they want, but the other 20% is this real sort of specialized product that's some specialized new protein bar because they like to go hiking in the mountains or something like that. Maybe there's
Yeah.
where Instacart can sort of fill in, can sort of fill in the gap. So I do see some opportunities there. I guess the risk would be was one of the things that they mentioned in the filing is that Whole Foods was a significant retail partner up until 2018 with Instacart, ceased using the platform May 2019 following the acquisition of Amazon. And so it's kind of like the issue with all of retail. Does everyone compete with Amazon? And are we going to buy everything from Amazon? And if you were to talk to a stock analyst one time, they said that, the issue with building a portfolio of retail stocks is who's not going to get killed by Amazon is sort of the question.
Yeah, 1,000%. And it's talk about who has data on consumers, right? Just you're looking at someone who owns AWS at the same time, who can leverage a lot of different data to figure out what consumers want. And it is interesting because I think that's maybe where Instacart could help a lot of brands is like finding this like
Mhm.
special niche of consumers and pulling that and seeing exactly maybe what brands they're clicking on, hovering over. A lot of that technology has improved immensely, where it's like they can even tell at some point just where you kind of sit and think about, right? Like you haven't even clicked or put maybe that product in your cart and then taking it away, but even just like your how you're moving around the application can provide that data. So I think that's huge. Sometimes though, I will say, in terms of delivery networks, right, Amazon's is huge, Walmart's is huge, uh, Kroger and Albertsons will be large as well. uh, Instacart I found has been like, if you're in suburban areas or the farther you get out, right, at the same, it's just not, sometimes not even available because if those stores aren't there, right, then what are you purchasing? So I guess we also have to
Mhm.
consider where the consumers are moving to, where they're living, because I think if long term, if we see more people move into suburban neighborhoods, uh, what does that mean for the life of Instacart as well?
Yeah, those are really good points. I hadn't thought about that geographic migration. I want to toss up a financial chart from the filing. I can sort of walk through this. I think there's some interesting sort of insights to be gleaned if we can get that on the screen, the chart that's in blue and white. So this is just sort of a snippet from the SEC filing that Instacart filed. And so you see on this right column here, these are numbers in millions. So the number of orders, 132 million in the first half of this year versus the first half of last year. So not a lot of growth in terms of total number of orders. So a lot of that growth is slowing in terms of customers placing the orders. And then this GTV, that's going to be the value of all of those orders. So that's growing a little bit faster. So, roughly 15 billion up from 14.3, billion. Still not a tremendous amount of growth for a company that's going public. And then you see this next line, revenue about 1.5 billion up from 1.1 billion. So that's growing faster than what is being placed in the cart. And I interpret that as being more of a shift towards advertising. They do say that the advertising is about 30% of the revenue. And that translates to, you see on that, fifth line, the gross profit margin going from 68 in the year ago first half to 75. That advertising revenue is higher margin business. And so that's, contributing to the gross profit, margin increasing. And then you go further down and you see that the company has swung from a loss in the EBITDA column, sort of a quick and dirty way to look at cash flow, from negative 20 million to positive 279 million. So they're positive on, EBITDA. They're positive on, net income. That's true in 2023 and 2022 for the full years, but that was actually, they were negative for the first half of 2022, which implies that they were pretty wildly profitable in the second half of 2022, in addition to remaining positive in the first half of 2023. So if I was looking at this and, let's say meeting with the management team, deciding whether to invest, putting my investor hat on, I'd want to know why there was such a quick swing. Was that sort of cost cutting, or is that really a mix shift, or those things? But it's kind of interesting. It's looks like this company, they've been positioning it for this IPO. The investor appetite for companies losing money has declined. They want to see profitability now. Instacart's doing that. They also revamped their management team, from what I understand, where they have a bunch of executives who have been through this before and taken companies public before. So this seems like it's been in the works for some time, and it looks like we're going to see it go public unless something unusual happens with the market, or there's just not the appetite from investors. But we'll see.
Yeah, I love the advertisement point you made too, as well as in the numbers. So I think, right now when the market is where it's at, or the consumer spending is where it's at, I mean, marketing is the number one thing you can do, right, as a brand. Get your name out there, find those consumers that are looking for you. So hopefully that continues to stick, and that if the market does turn and there's as maybe deep of a need for advertising, people continue to stick with it. Yeah, it is interesting that quick growth, and excited to see that they've seen some profit out of, if you compare, right, to something like Uber Eats or a number of different on-demand delivery platforms, right? So I'll give them that a gold star.
Yeah, and then part of the pitch they make in the filing is that companies that advertise on Instacart, whether it's through ads or sort of their own pages, they have a number of different ways to do that. They see an increase in sales of 15%, and they say in some cases it's 30%. So they make the case that it's a pretty good ROI for CPG companies advertising there. But want to move on. We'll continue to follow Instacart to the Labor Day reading list. I'll bring up some of these articles. First one to read. This one will take you about a minute and a half to go through this pretty quickly. He was pretty efficient with his words. Is the 6 charts reveal freight industry is bouncing back. It's written by our CEO and founder Craig Fuller. Published an article on Wednesday, and becoming a little bit more positive on the market. After really we've been in kind of the doldrums for almost a year and a half, essentially, in the freight market. So he goes through sort of a quick quickly, 6 charts of why things are turning a little bit more positive. Our favorite chart here at FreightWaves, if we could just pick one out of the, however many thousands are in Sonar, is this outbound tender rejection index. And you do see that rise, from 3% to 4.39. Now, 4.39 is not a tremendous, rejection rate, but it's a lot better than 2% or 3%. Still less than it was a year ago. And we're probably getting some help from the hurricane situation. Reefer is certainly, bringing that up.
Yeah, it's kind of funny to like look back a couple years ago when we were seeing this get closer. I mean, let's be honest, in high double digits at least. So to say, oh, here we go, yeah, 4%. This is a great day. Yeah, I think a little bit of that has to do with going into the holiday too. We're at the end of the month into Labor Day weekend. Reefer in particular, has been pretty big. I'd be interested to dive into some of the markets, something even like, Phoenix. We talked about Gatorade, being huge there with this holiday weekend. I'm not surprised that we're probably seeing a bunch of groceries getting stocked up out there. Their great barbecue holiday in particular. Plus you add the hurricane, and I think again, not too surprised by that. I'm very interested to come back from the holiday and see if we see as big of a dip as we saw for June and July for Memorial Day and the 4th of July, because we haven't seen really the NTI move as drastically like we saw with those holidays. But yeah, it's hey, any movement for those carriers out there in the rejection index, I think, is a positive. But we have to be honest, the negative is to see pretty much, I think, any movement past at least anything past 5. We're probably going to have to see a lot more carriers start leaving. But we've got this wonderful 4th quarter coming up that I think we're all waiting to see what that demand looks like. And things I don't think things are pointing to as positive as the situation as at least the carrier side would probably like.
Yeah, I think that's true. I think, one thing that really struck a chord with me was that, analyst meeting a week or two ago, JB Hunt's president of intermodal, Darren Field, was there. And, he's asked, what are you hearing from customers? And he says it's really been mixed. He says there's some customers that say sales are holding up. We've gotten our inventories down to where they need to be. We need to move stuff as a result. Similar to what Walmart has been saying at its analyst calls. That may be one of the customers, but but he says there's other customers that say sales are still depressed, their inventories are still way too high. We still have to draw those down. It just really depends on what people are selling and how much work they've done on their inventories. But some of the more discretionary items, those have been weak for some time, and there's still a lot there in inventory. And so there's I think I'm hearing a lot of mixed things from shippers. There's another good article that I want to highlight here on grain exports. So I talked about this one yesterday on, or I guess last week, Thursday, on People Speaking Rail. So this one is written by Joanna Marsh, who interviewed Jay O'Neill, who is one of the experts in grain transportation. And he calls it a wacky year, and it's a question of, is wacky sort of the new normal? And so essentially what's wacky about it is grain volume has really been depressed. So I have a Sonar chart that shows that grain volume has been absolutely awful on the railroads. You see, 2023, the white line for grain. Well, what happened? People still have to eat, right? Well, there's fewer exports is the issue because the growing conditions have improved elsewhere, including places like Brazil. And there's more, demand here locally for things like ethanol. So if I'm a CPG company, I'm looking at this, it's kind of, I would say good news. It's part of the reason why, commodity prices have come down, because there's not as much demand for exporting. So if I'm a CPG company and some of this, agriculture products go into my cost of goods sold, that's a positive thing. And you've also seen commodities come down that are grown in places like Brazil. Like there's been a big retreat in coffee prices. Now, Brazil is the biggest exporter of coffee. And so those positive growing conditions not only make it so we have to export less grain globally to locations such as China, Japan, et cetera, but it also decreases the input costs. I think over time, CPG companies having a harder time managing some of these input costs because just the weather patterns have gotten to be so extreme that it
Yeah.
makes growing conditions difficult.
Yeah, it's an interesting way that Mother Nature kind of enters itself into the supply chain, right? And I think you and I have talked about before, like how are we going to see companies like General Mills, et cetera, bring down their prices? Well, it sounds like this is uh,
Mhm.
nature's way of making that happen.
Yeah, there was a one-liner from Mark Smucker earlier this week or last week on that, where analysts asked him, commodities come down, are you seeing prices come down in CPG? And he's like, not really seeing that. I mean, it's sort of the elasticities haven't been high enough. They haven't felt enough volume pain in order to do that. The exception might be something like coffee, which is kind of more of a pass through. It's not really processed all that much, but hopefully
Yeah.
consumers get a little bit more relief. So with that, just going to preview what's coming up on future episodes of the Stockout. I think a couple of these you booked. Flow Space on September 11th, GXO on September 18th. So those will be both good. Flow Space does fulfillment management for omnichannel brands. GXO, I think we all know the big logistics company that came out of XPO. And then Bold Carts on September 25th, which is a new one for me, but I think it'll be an interesting one. The company manufactures vape cartridges and batteries and other paraphernalia for cannabis and vaping technology, and they talk about the supply chains of that. They do a lot of B2B, help other customers get their name on products, get all that manufactured and in stores. So kind of interesting from an emerging market. There's a lot of startups that are addressing that market. So those will all be great, and happy to have you join the show. Really will bring a lot. And with that, I think
Yeah,
we're
I'm
yeah,
excited. Thank you for letting me on, and thank you to the audience. Happy to go on this ride with you.
absolutely. And we'll talk to everyone next Monday. Hope everyone